Welcome, everybody. Thank you for joining us again. Welcome to the Hustle Harder Show. Really excited to have our guests on today. We had an opportunity to do a live event last night, so I feel like we've got a good start going, but excited to dive deeper into the conversation with our guest today, Jon Grabowski. Jon is the CEO of Red Cedar Capital and doing a lot of interesting things in the real estate space. Build for rent, you're in the land business, and lots of cool stuff. So excited to dig into what you're working on. I'll let you give the folks a little background on you and your business, and I know we'll dive into your story a little bit more as well, but always good to understand the high level of the business that you're running.
Sure. Yeah, no, appreciate being here. Thank you. So I'm the CEO of Red Cedar Capital Partners. We have 60 employees here in Charlotte. We're a land developer and home builder. And so primarily on the land side, we're developing residential land, putting lots on the ground, not only for Red Cedar Homes, which is our home builder, but also some other national builders throughout the Carolinas. On the home building side, we build an entry level and move up home. We are currently in Charlotte in the Triad. We're moving into Raleigh. We've just opened the Jacksonville market. So our path of growth as a home builder is taking us through the Southeast. Part of that story as well is we're also in the build to rent space, which has been a really interesting change for us and a nice complement for what we do on the home building side.
Love that. That's awesome. I think a lot of cool stuff to dig into there. Before we get into the business side, we'd love to back it up a little bit and just learn a little bit more about your story and how you got into this. I know we touched on it last night a little bit, but what got you into real estate to begin with? I'm always interested in the human element behind all this stuff. And what was it about real estate that got you interested and excited early on in your career that made you think that this was a direction you wanted to go?
Yeah, I think the freedom behind it. I'd always been interested in having a career that allowed me the freedom to essentially be my own boss, but also work on deals and make deals and work with interesting people. And so the early part of my career actually was in sales. My first job out of college was as a pharmaceutical sales rep and learned a lot of, I think, basic sales skills that have helped me in my career. But my story started in Detroit, Michigan, which was actually probably the hardest market to break into from a real estate perspective. I started a brokerage. It was focused on developing and building high-rise condos on the riverfront in Detroit. So it was an interesting start. And like I said, from a sales perspective, I had to really learn how to tell a story and motivate people. From there, that turned into development. I was able to participate in some development projects in Detroit, learn how to finance a project, capital stacks, work with lenders, work with investors. And really, that was the baseline for my career now in the land development business and as a home builder, because it's a business that requires capital, requires understanding what investors are looking for in terms of their returns, but also where margins should be, to be able to put out the product that we want to put out. But what was interesting is my career was interrupted in 2008 by the GFC, the financial crisis. Because I was younger and was starting my career, I think I was fortunate. A lot of my mentors at the time were established, big home builders, big developers, and their careers were completely interrupted. And they spent the 5 years scrambling, trying to recover just to come on the backside of it, where at that time, with some partners, we were able to just take advantage of the distress. And so we put a team together. We would buy foreclosed homes on courthouse steps for pennies on the dollar. And we would renovate them, put them back on the market to rental funds that were buying them at the time. And it started with 2 homes and then 4 and then 8. Some of our final portfolios that we sold were hundreds of homes. And so it really materialized. We understood scale. We understood that in order to operate in a couple different markets and have a vision, you need to hire people that are bold and decisive, smarter than us. And I think at that time, it really formulated how I wanted to run a business in more normal times as we graduated from that space. So I was fortunate that we had capital to deploy after that time and start Red Cedar in 2015. We picked the Charlotte market because the Southeast, there's plenty of job growth. People want to be here. And our product at the time was a more infill, higher end product that we were the builder on, and we used our own capital to do that. But very quickly learned that if I wanted to build a scalable business and wanted to bring on even more talented people around me, we needed to be in more of a production model. So we pivoted, and another event happened similar to 2008, which was COVID. We were sitting on a lot of land positions and developed lot positions, had contracts on those, and those contracts went away at that time because the housing market pulled back. So we had to pivot once more, and we took that opportunity to create our home builder. Small scale at the time, but we started building through our inventory and our lots. And then we also started looking to build to rent and take from what we had learned during single family rental 10 years prior. And how could we put more homes on the ground, affordable homes on rental product? And so really since COVID, it's been incredible growth. It's been fun. Right now, we have 4,000 lots in the Charlotte market that are in our inventory to build through. We have several very large build-to-rent communities that we're building through. And we're starting to buy land in some other markets as we expand. And the growth of our business just in the past 18 months, as we've looked to bring on those bold and decisive people, has really just energized me personally as my role has evolved from being the land guy or figuring out to actually develop it, and now bringing on team members that know way more than I could ever understand in those areas and working with them to do it. And so we're enjoying the growth and can't wait for the next few years to see how it turns out.
Well, that's awesome. There's a couple of things I want to double click on there. So first, I love your story in particular because you didn't come from the institutional capital side and then reverse engineering from a capital perspective. You had a very natural progression for your career. You started doing some really cool projects, but then 2008, find the opportunity. So much of life is just finding opportunity and the challenges. You did an awesome job of that. And you were at a very opportune time in your career to be able to take advantage of that the way you did. But you started doing one house at a time and flipping those houses, making some money, redeploying that capital, rolling it into the next project and the next project, and organically building to a point where then you could start doing some of these other things like building a large home builder and then some of the build for rent thing. All that stuff comes on the back of a lot of singles and doubles. I think that's an amazing story because there's a lot of people out there, I think, who look at folks like yourself and go, man, how do you get there? And you get there by putting one foot in front of the other and finding the opportunity in the chaos. And I think that you have several ways that I think you've done that, but I think that's a really amazing story because I think it's relatable. You don't have to get born into this, my dad ran the largest home builder in the Northeast and I just did the same thing down here. That's not the story. And there's nothing wrong with that either, right? But I think it makes it a lot more relatable and attainable for folks that can watch that story play out. And you've obviously done an awesome job of executing along the way, which is really what it all comes down to. You got to have all that other stuff, but if you don't execute, nothing matters. So I think that's really cool. You originally from Detroit?
No. So originally from Philadelphia. So I'm a diehard Philly guy, but went to Michigan State. I'm a Spartan. Stayed in the Detroit area after college. I think that both Philly and Detroit are blue collar towns. My family background is blue collar as well. And so that's something that even in my own family, I've tried to inspire in my kids that we're cut from that cloth. And that's hard work. We're not going to be smarter than a lot of the people that we're competing against, but we're going to outwork them. And so just in my daily routine, I get up at 4 a.m. I'm sending out emails or notes or reflecting before anyone else can. Sort of my Kobe Bryant Mamba mentality. That's my competitive advantage. I may not be smarter than some others that do what I do, but they're not going to outwork me. And I also do that to have some balance. My kids get up at 7, 8 in the morning. I want to spend time with them. That's part of the freedom, being an entrepreneur and being a business owner, to balance that out between them. And I would also say that from where I'm from and where my career has taken me, I think I've seen that across the board as just people, whatever career we're in or whatever we do, we all want to make an impact in one way or another. And for me, I want to make an impact for my kids, give them a platform that if they want to take that and run with it, they can, or give them the optionality that they can literally do anything that they want, but they don't have to necessarily start in the same place that I did, which was with zero in the bank account and having to do one deal at a time. But I think that what I found in a lot of other partnerships and relationships over time, we all want to make this impact. We all want those freedoms. And I think it's created the opportunities to be able to take advantage for the next steps. To your point, I think timing is important in opportunity, but your eyes have to be open. You have to be able to see those opportunities. And so if you put yourself in the right positions, you'll be able to take advantage of them. It's funny, last night at our event, Someone had come up to me and he's just started building houses. He's using investor monies, no banks, no debt. He doesn't have a balance sheet. He's just getting started, just like I did. And he just asked, what's your advice? How do I get to that next step? And I said exactly what you said. That next home, I'll make an introduction for you to a local lender. Talk to them and convince them to give you one shot, maybe at 50% leverage on that first build. But just do that first deal, and that's just going to be your backbone to then create your balance sheet, do the next deal, then you do two beyond that and start to build from it. And that's 95% of this. It's showing up, putting the effort, and then once the opportunity comes together, 2 becomes 4, becomes 8. We've seen the success from that.
That's fantastic. I love that. That is great advice, because I think we live in a world, social media dominates a lot of things, and you see everyone's highlight reel. And I think especially for a younger generation, they might confuse that with reality, and it's not. And I think the ability to really slow down and focus on just what do I need to do, and focusing on quality too. You didn't get to where you're at by rushing through everything. I think this is an important point. You have to really focus on the details and being really good at what you're doing. You can't just show up and expect that it's all going to work out for you. You've got to put in the work. I think that's a great message. And really, if you think about it in a methodical way, it might not be as sexy in the beginning, but it's building the blocks, putting the blocks one on top of another to get you to that point where all of a sudden it does start to become a lot more fun. So I think that's amazing. We were talking right before this about coming up in a more challenging environment and how that can inform and make you a little bit sharper when you start to grow. And you started your real estate career in Detroit. Renovo was founded in Chicago, and we were a Chicago-only lender for 9 years while we were building the platform to be able to take it into a national scale. I think that that's been a strategic advantage for us. Have you seen that in your career in terms of starting in a market where, and I can't pretend to know a ton about Detroit, but I know from a real estate perspective, it's been a challenging place. Have you seen that impact? Is that rung true for you?
It's the backbone. It really is the backbone, I think, of my ability now to put deals together. We're confronted constantly on land transactions between sellers, between capital stacks, and putting deals together that are complicated. They're easy compared to what I learned in Detroit. The one project that stands out was I was part of the Book Cadillac Hotel development team in 2006. It was an abandoned hotel for 30 years, but when it was built in 1924, it was one of the most famous hotels in the world. And to get that deal financed, there was a developer that came in out of Cleveland that had experience in historic renovations. My responsibility was developing the condos on top of the hotel, which was fun. But there were 17 layers of financing to get that deal done. It ranged from historic tax credit facilities to having equity invested from some of the unions and pension funds that were in town. And so sitting at the table and understanding how a lender that would be in a certain position at $100 million versus the electrical union who's in at $2 million, and their positions and protecting their interests and what they want out of the project, and still having your sights set on, here's this beautiful jewel that we're developing for the city and for people to enjoy in a very challenging market that's not Charlotte or New York or San Francisco. There's a lot to learn out of it. And so the lessons from that, because that's a deal that was successful and did close, when we run into hurdles or gating items, I can reflect on that. And we found an answer and we found a way with the partners on that project to get it done. We can get this done. And I think it's the same managing and running a team and a business. The way that we're structured at Red Cedar, we have divisions within our business. I sort of run it almost like the United States. I tell my team, I'll be the president. I will do my job to be decisive. If you come to me with clear information, I will make a very clear decision and guide us forward. But I need you all to be the governors of your states. So my CFO is the governor of California. My CIO, he's the governor of Texas. My head of sales, she's the governor of Illinois. And so in their own states, they have their own teams, their own rules, their own platforms and decisions that we've given them the ability to make. And we rely on that because, again, those are individuals not only as leaders, but as people who I think are stronger in what they do than I could be or some of the other partners in Red Cedar.
Oh, that's great. I don't know if I've heard it described that way before, but I like that analogy that a government where you've got the layers. That makes a lot of sense. I like that. Now, one of the things that I wanted to make sure we touched on in this conversation is bringing it back a little bit more locally. And I know you guys are expanding your business, and I'd love to talk more about how you're thinking about growth and especially footprint wise. But Charlotte is home base. It seems like this is where you've done a lot of your business to date. What's going on in Charlotte? What are the big trends that you're watching? Is there anything going on, either macro, but also local, that keeps you up at night?
I think Charlotte on the surface doesn't appear to have the same grit as a Philly or as a Detroit, but it's a hard market to enter. And I think that was what was attractive to me, because in 2015, we had experience in Texas, we had experience in Florida, we were in Atlanta, and we chose Charlotte because there were barriers to entry to enter. There's challenges through entitling land and just development in general. And there's barriers to entry for other builders to come into the market. And so we liked that. We felt like if we spent more time understanding the market and became experts in the market, we could stand out a little bit more. I also think that the growth in Charlotte, not just from the young professional movements, college graduates that are coming to a place with a lot of job opportunities, but a nice place to live, 2 hours from the mountains, 3 hours from the beach and such. There's a ton of retirees. We see it on our sales side, who's buying our homes, but also just in the general demographics of who's moving to the Carolinas. And then the other piece that I'm very focused on as Charlotte being a hub, are the spokes that come off of it. So we've entered the Triad market, which is only an hour and a half away. The Raleigh market is an important market for us to grow into, but even into South Carolina, Greenville, Charleston. We've entered the Jacksonville market in Florida in a similar manner so that we can spread throughout Florida. But the access from here, with our headquarters being here, and the talent that we can attract has really been the reason why we've been able to create our platform that we can grow off of it.
I love that. And it sounds like you did some work to look at a handful of, whether it's demographic or geographic factors, to make a decision. So you very intentionally entered Charlotte for some specific reasons.
Yeah, we did. Absolutely. We were very close to actually opening in Atlanta, which is a fantastic market. We've done a lot of business in Atlanta, but Atlanta's growth and its saturation was something that wasn't as attractive to us as Charlotte. It just had a better feel in terms of its growth right now, and we felt it was the right fit for us as well.
No, that makes sense. And I think in your business too, those drivers are going to have a material impact on your ability to move product and what kind of product you can put on the market. That makes a lot of sense. One of the things I do at Renovo is I drive our geographic growth strategy. I have people come up to me all the time and ask well, what work did you guys do to figure out which markets to go into? And it's always interesting because for us, we have this very long-term vision. And so we definitely looked at some demographic stuff, and we looked at some days on market and other things that would indicate that this is a good market for an investor client. But those things are snapshots in time. And I think we are looking to build a super long-term business. Those things will change. Now, over the next 10 or 15 or 20 years, those numbers will move all over the place. And so we expanded from a different perspective, which is if we just find the right person who can find the right customer, it doesn't really matter what market you're in. You can pick the market with the worst reputation for real estate, but there are good deals being done there. It doesn't matter where it is. Now, there may not be as many, but rest assured, there are a handful of people who are really dialed in that will find the opportunities, and we just have to find them.
That's right.
And so we've grown from that perspective. You have to do a little bit differently because your business is different, but it's just interesting, that juxtaposition of how you expand and grow. So very, very cool. In terms of this region, we talked about this a little bit last night, but I think this part of the country is thought of as still having some elements of affordability in terms of housing. Obviously, affordability from a national perspective is very challenged, and it's creating a big issue. Now, some of that's driven by rates, but there's a lot of other factors. Charlotte seems to have a little bit more affordability. Certainly some of the areas that you mentioned that are outlying from Charlotte, the Raleighs, and there's a lot going on. As a result, a lot of people coming here to seek that affordability. How do you think that plays out over the next 5-10 years?
Yeah, I mean, we saw a significant jump after COVID from Northeast and Midwest folks moving into the Carolinas. I would say that was the largest influx, similar to probably how in Texas you saw California and the West Coast come in. So there's definitely been this shift. And so I would say at that time, Charlotte and the Carolinas was cheap. And now with that influx, it's affordable comparatively, but prices have come up a little bit. But no, affordability is a real issue. And it's something that we care very much about. That is very much at the crux of how we develop land, how we identify sites, the type of product that we build. We are trying to be a part of the solution of affordability. We're active in Charlotte with the city of Charlotte on some affordable housing programs that we participate in to help however we can. We are trying to find as many angles to work on our product, which our product we feel design-wise and finish-wise is some of the best that's out there. The product that we're building, whether it's our quartz countertops or our open floor plans and our elevation design, anyone who's going to either own or rent our homes for the price that they're at, they're going to feel fantastic about it. And that's very important to us. But we want to sell more homes and rent more homes to more people. And the key to that is affordability. And so we've made some strategic decisions either in the size of our homes to try to create a little bit more affordability for people that are coming in. We bought a building supply company, Evergreen and Maker. They supply all of our cabinetry, flooring, and interior finish goods, which has been incredible cost savings for the quality that we're receiving from that. And then even in our product line, certainly build to rent. We've also launched an active adult division within our company, paying very close attention to the price point and the rollout so that we can continue to attract folks that want to move into this region for the various reasons, whether it's retirees or job growth or the weather. But I think over time, across any market, the more that we can solve for affordability, have a person's ratios in line with their income and what they can afford, bringing that more on par with history and where it is right now, we're just going to have a lot more success. So I think it's a win-win. The more effort that we put into that, the more homes that we'll sell and we'll have more rooftops for people to move into.
Yeah, no, I think that's exactly right. And the one thing you said in there, I thought really interesting, it's not just about getting an affordable product, but it's about providing a quality, affordable product. And I think when you combine those two things, that's value. You're creating value. And I think that that's incredibly important because I can imagine there's people out there going, well, man, if I can just put a house on the ground for whatever that can sell for $350, I'm going to sell it all day long. But if that house is terrible quality, that's not a long-term strategy.
It's not. We use a term at Red Cedar, thoughtful. We want to be very thoughtful in the decisions that we make. We want to be thoughtful of our customer. We want to be thoughtful in our design. And so even in the smallest ways, we build a floor plan, we critique it and analyze it. How can we use space a little bit better? We survey a lot and we want to understand what the needs are. And it's so interesting to me that when you look at housing in a lot of different markets at a lot of different price points, there's still the concept of that it's a widget and it's just production and just mass produced. And it doesn't need to be. You can mass produce it, but be thoughtful in the design and how are you using the nooks and crannies? How's the home going to be lived in? And that doesn't add cost. It just takes a little bit more time. And there's no shortcuts in this. It takes the effort to be able to create that type of product. And I think we're starting to see that across America now where there are more options for living, especially now with more rental options between multifamily apartment living that are like mini resorts, build to rent becoming a sector, and then all the different divisions with home ownership. You have to be thoughtful and you have to think through what your client and homeowner wants. It's important.
I think that's fantastic. Thoughtful is a really great term because I think to your point, it doesn't cost more. It takes the human side and putting yourself in your customer's shoes a little bit. But I think the long-term effects, it's really hard to nail them down specifically. But I think that when you take the time to do things the right way, I know we talk a lot about we want to do things the right way, not the easy way. And listen, there's lots of people out there that are transacting and that are in your space, that are in ours. There's lots of different ways you can do it and you can be successful. But I think if you're trying to build something that is sustainable over the long term, thinking about how do we do it the right way, and build real value into whatever it is that we're doing, That's how you build something that lasts.
It is, yeah.
I think there's a lot of people who have come in and made lots of money in a very short period of time without using that principle, but that doesn't last. It's more of a trade. And I love that you guys operate your business that way. I think that's got to be why one of the reasons that you've gotten to the point you're at, because it's hard to do it without value.
It is. You mentioned earlier social media and real estate and investment. There's the Grant Cardone approach of the sex appeal of just making money. It's about making money, making return. But I think if you focus on that too long and don't think through what are you actually creating, what impact are you making, you're not going to get the residual off of that. And so I've taken the approach that we're going to be thoughtful. We're going to create this wonderful product. We're going to make money doing it. We're going to make our investors money for what we're doing. I just think that's a recipe in the long run that's going to just bring in a lot more satisfaction and better returns over time, rather than just always chasing returns only and not worried about anything else. You're going to miss the mark eventually.
And I think you said that well. It's about a balance because the investors need to make money. The customers need to be happy. You need to build a culture internally that creates something that your team wants to show up to and be a part of. It's about taking all of those little things and putting them together. And that takes some vision. I think that's a great lesson for folks who are trying to build something. I think you really can't take your eye off the ball in any of those areas if you really want to, maximize the opportunity. Let's dive into a couple of things. I sent you a handful of questions that I think would be interesting prompts to get into some cool conversations. You sent back a few that you thought were good. Let's start down that path. What is the best or your most favorite project that you've ever worked on? And that doesn't have to be one that was successful, by the way. It could definitely be one that didn't go well and you learned a lot from. But does something come to mind when you think about your favorite deal?
Yeah. Well, I mentioned earlier the large project in Detroit that I was a part of, and certainly from the complexity and the responsibility of the project. Not only was it a real estate deal, but it was a civic deal. A lot of satisfaction came out of that. I love to tell the story of during the distress period, we contracted a piece of land, I think it was in 2014, develop lots outside of Atlanta. It was about 50 lots. At that time, you could buy develop lots for a couple $1,000s. It was an incredible opportunity. And our plan was to buy the lots, put some homes on them, and sell them through our normal paths. During the inspection period, when lots are developed and sewer is ran within the site, standpipes, 6-inch PVC pipes come out of the ground that show where the taps would go to run the sewer lines to the home. And so during the inspection, we were there with the inspector, and somebody just happened to pull the standpipe, and it came completely out of the ground. There was no sewer run in the site. Someone had just graded the lots, took their draws from the bank at the time, and never put in any infrastructure.
Wow.
It was such an exciting deal for us because of the opportunity, but we did the due diligence and couldn't move forward with the deal, obviously, because at the time it made no sense to run the infrastructure and such. So it was disappointing that we had to exit the deal, but it's a reminder that even to this day, we'll say to each other, hey, don't forget to check if there's sewer, because it's funny and a remembrance, but it's also the idea of do your due diligence, double check, make sure everything's there, take your time, be thoughtful, be thorough. That's probably one of my favorite stories that not only encapsulates what happened at the time and how crazy it was, but also how important it is to work through a deal in your due diligence.
I think that's a great story. It's funny because I think when I put that question together, my assumption was that a lot of people would read that and then they would talk about the most profitable deal, which is great too. And those are awesome stories. But I find, and we work with hundreds or thousands of clients who are doing projects all the time. And one of the things that we really train our lending team to do is really take a look and put yourself in the customer's shoes. Like, we are trying to build long-term relationships with people. It is not in our best interest to help them do a deal that's not a good deal for them. And yet you have clients that are really, oh, I want to do this for whatever reason. But sometimes the best thing we can do as a lender partner is try to help our customers see that this actually is not a great deal for you. And I think those are some of the most interesting stories. Sometimes the most important deal is the deal you didn't do.
Absolutely.
And I think sometimes people get so locked in on this idea and the vision or whatever, and they blind themselves a little to some very obvious things that are going to be a challenge. Could they be overcome? Maybe. I think as an advisor and a partner, we really want to try to help our clients do great deals because we want them to come back. We want to make money and come back and do another one. And in your case, you want to keep the engine going and not get bogged down by something that all of a sudden has major issues that you didn't just take the time to find. I think that's really cool. Speaking of deals you didn't do, or maybe ones you did and learned some lessons, in your mind, what's the biggest mistake you ever made as you've been building your company?
I can't think of a particular time, but in general, chasing returns or chasing the money, I would say in general, does not result necessarily in the best deal. Sticking to the fundamentals, we analyze land deals or build deals. We have fundamentals that we're looking to fit within our deal sheets. So it's the return for our investors and our returns and such, but making sure that there's enough contingency, enough that if something happens, what's our alternate exit strategy? And so what we learned on the land side, because most of my mentors were land developers that were burned in 2008 and were left with land deals and gave them back to banks. And that was, everything that they had. So putting something away for a rainy day was important. And then on our land deals, making sure that we have multiple exit strategies. And so for us, if we can develop lots and sell them to Red Cedar Homes and build our own housing, that's terrific. But we're just as happy to sell those lots to another home builder to build beautiful homes on them, or just as happy to put that deal into a build to rent deal. So I think we've had success because we look at alternate exit strategies and make sure that those bases are covered, because deals will go sideways. Those contingencies will get used. And so there's always mistakes or problems that come up in any deal. So you have to plan around it. And so I would say that's the greatest lesson. We're not going to chase returns. We're not going to chase a deal. We're going to sit back and make sure that fits our parameters and our fundamentals of what we're looking for. And if it does on the front end, chances are it's going to be a successful deal and we'll work our way through it.
Yeah, to me, and this goes back to some other things that you said today, but discipline, building discipline into your organization. And I think it can be oddly challenging when you're really successful for a long period of time, that it just starts to become expected. And it can be easy for that discipline to slide a little. And that's when you find yourself in challenges. Have you found any ways or anything that comes to mind in terms of building that discipline into your team and into your culture? Because I think it ultimately becomes cultural. I know for us, it's a major factor, the discipline. And of course, we're lenders and we're in the business of assuming or assessing and evaluating risk. You have to be disciplined. But man, when the market's on fire and all of our competitors are doing crazy things, it's easy to feel like you need to get into whatever that trend might be. But discipline is important. And I think we've done a good job of building that in so that there's at least a handful of people who are trying to hold that line, or at least asking the questions that need to be asked. How have you done that in your business? Does anything come to mind?
The way that we're organized in the structure that I described earlier, I've actually used autonomy as a way to create the discipline, because it's not just me holding our team accountable, but it's our team members holding each other accountable. And so our success is so much driven by our vertical construction team coordinating with our finance team, coordinating with our land team, that accountability basically is created naturally. And so, on our end, we have basically an all hands ops meeting once a week, and everyone at the table can look at each other in the eye. And I don't have to say anything, because if somebody didn't do what they needed to do, they'll hear it from their team member. Or if they need help, they'll get help from their other team members. And I've just found that there's a lot of different styles in any business. And what I've found that works maybe for my personality and the personality of our team is give the runway for people to make their decisions, give them the information that they can make the best decisions, put up the guidelines, and we use deal sheets to analyze pretty much any transaction that we'll look at. And so we can put certain conditions in place to make sure that it's a deal and there's enough security in there to do it. But in terms of the actual execution of it, it's really relying on team members and holding each other accountable. That's the culture that we've created.
I think that's fantastic. What that makes me think of is ownership. You have team members that own whatever their piece is. If you have enough of those people, then it becomes self-fulfilling in some ways, or self-propagating. So how do you hire for that? To me, I do that a lot too. Accountability and ownership is so huge in our organization. I do certain things in the interview process to make sure that I'm dealing with somebody that will take ownership and has accountability as a character trait, because not everyone does. And there are ways I found that you can do it. Have you figured that out? Is that something that you specifically target when you're hiring your team?
Yeah, I would say that there's two categories of hires where we've had a lot of success. We love bringing in talent that's outside of the home building space. What I've found is that in most other real estate firms or in home building companies, there's a lot of recycling of people who make 2-year stops here and then they go, maybe they can increase their bonus a little bit and then they'll jump to the next firm and they all look exactly the same. We found that if we can find people, they have to be decisive, they have to be motivated, they have to be bold, and they have to be really good communicators. If you have that skill set, I can teach you how to do a real estate deal. And so that's the key for a lot of the folks that are on our team, maybe on the land side or the deal side or just running the business in general. On more of the blocking and tackling, as I call it, the actual physically developing the lots or building the homes where you do need expertise. You need to have learned over a period of time of how to do those things to be an expert. We have had a lot of success of bringing in individuals with amazing backgrounds, coming from amazing firms, well-respected home building companies because of the autonomy and the ability to maybe modify the playbook a little bit that fits their personality and style. What makes most national and public home builders so good is that they have a process down that's so refined, so check the box. That is why they are good at what they do. It's why they're publicly traded and investors buy their shares because of that process. But over time, it creates a mentality of just keep doing the same thing over and over again. And that's a discipline. And there's some people that are very good at that and they want to operate that way. We're a little different. We need the discipline in certain process, but we also want some people to think through problems, the type of projects that we take on, take a little bit of creativity. I think we attract talent that wants to evolve that part of their personalities a little bit and be able to manage through and not necessarily be told on every step of the way how to do something. The technical talent that we have brought in, that's where a lot of it has come from. And it's just great to see it come together as a band and play really cool music.
I love that. And it's about finding people who have this inner desire to be doing something a little bit differently, to be able to offer that. Finding that right fit is so incredibly important. We picked up the phrase, and I think I got it from a podcast I listened to a while back, but hungry, humble, smart. We look for people who are hungry, humble, and smart, because the humble piece is the accountability piece. It's like being willing to say, hey, I messed that one up, and owning it. But only by owning it do you free yourself to find a solution. Mm-hmm. But the folks that nothing is their fault, they will never get better, or their growth will be stunted because they're unwilling to admit that they messed up and therefore find the next way and the right way. They get caught in this finger pointing game and no one gets better doing that. So we just try to find that up front and really screen those people, because for us, it's so important. We want to run an organization like that too, where you give people a lot of autonomy. You give them the freedom to do their job, to be a little bit creative, but you got to have that ownership to be able to say, all right, that one didn't go as well as we wanted. Let's look at that. How could we do that better? And I think that breeds a really positive, strong culture that we're trying to have. Sounds like we have that in common.
We do, yeah.
All right. So last couple of things, I think these are some fun ones. What book is on your nightstand right now, and why'd you choose it?
So right now, it's Elon Musk's biography. I'm not a techie at all. I know nothing about his background, but I would say the book prior to that was a Churchill book. The book prior to that was a Steve Jobs book. Book prior to that, I forget his first name, but Rubin, the music producer.
Rick Rubin.
Rick Rubin, thank you. I like biographies. I like reading books that can educate me on how people think. How did they make decisions? How did they manage through challenges, adversity? When I'm reading less about trying to understand the story of specifically what the product is and such, but more so of just what that mentality is. I don't read very much fiction or things outside of that. I'm usually reading to study people and how they operate, just so I can pull those little pieces for myself or share that with any of our team.
I love that. You and I are very similar that way. I don't read any fiction. I love biographies. Yep. And for the same reason. Probably is why I formatted this show the way I did, because in some ways we're getting a little bit of a biography from you. But the thing I find interesting is when people who have accomplished amazing things, when you rewind, they're real people that built something and learning how to do that. But more importantly, I love seeing how they address adversity. All these people that you're discussing, like they've all been knocked down. How have they responded? To me, those are very relevant things to just how you live life in general, regardless of the time period. Who's the author of the Musk book?
Isaacson.
You were naming a bunch of people. I know Isaacson's done a lot of those. I have some of those as well. I'm probably 3/4 through with the Ben Franklin one. Dense, but it's good.
It's such a deep dive that it's almost too much to take it all in. If you can be looking for certain things that you're looking to pick up from it, there's enough information there that you're going to be able to figure some things out for yourself.
No doubt about it. You talked a little bit about your morning routine, and I think that also addresses a little bit of how you find work-life balance. I think those are really important points. Waking up at 4 is an aggressive commitment, but I love it. But if you're trying to fit everything in, there's only so many hours in the day, and the mornings are sometimes the best, quietest times to do some work. So I definitely identify with you there. The last question I have, the way we want to run our business is really relationships. Even though we're a lender, we are technically in a transactional business. We get paid when transactions close, but I think we really don't think of ourselves as being a transactional company. It's all about relationships for us. And I know we've developed a great relationship with you. And again, really appreciate you spending some time with us last night and today. But how have relationships played a role in your business? And before you answer, I think one of the things you said earlier, I wanted to loop back to this because I think you've done a lot of stuff. Your time in Detroit, some of those bigger projects, you were involved in creating these layered financed transactions, lots of different parties that were involved, being able to manage all that. Then '08 hits and a lot of people really struggled. A lot of your mentors, as you said, you were sort of at that right time in your career. But in order to get the business to where it is, I imagine that some of those financing relationships are things that maybe were fairly long lasting. I think it's very difficult, especially in 2009, 10, to go out and raise money if nobody knows you. Specifically in that context, how have you leveraged and thought about relationships?
Yeah, I think anyone in business has heard that relationships are important, but it's deeper than that. I think the most important thing in business relationships is developing the trust. Doing what you said you were going to do has probably been the biggest fundamental in my career, because if you have that credibility, if you tell someone that you're going to do something, that you're going to close on this deal, that you're going to pay them back plus a return, that you're going to give them this product, that creates that trust, that creates that relationship, and then people want to do business with you. I was thinking as you were formulating the question, we're doing 2 land deals right now in Charlotte with a relationship that I started in 2009. Our CIO of our company was someone who invested in a single deal back in 2014. And that's 10 years of a relationship that we fostered. We have a banker in town here in Charlotte who opened our first bank account, lent us money on our first home. We're a brand new builder. Similar to that advice that I gave last night, you just do the first one. And I know that we're paying him off now on another loan that he provided this year. And that's not the biggest relationship. It's not the smallest, but it's a relationship that we'll continue to nurture over time and grow it. And similar to our relationship, very quickly, Renovo stepped up. You took the time to understand our business, what we're building, understand the reality of the market, ask the questions of how can you help solve some problems? You did. And now we have that relationship and we're doing even more together. And so it's not just one relationship that stands out, but it's all the relationships that exist that start with doing what you said that you were going to do. And then the second thing that I'll add to that is more recently, it's easier once you do have a platform. you have some optionality in your deals and who you can do business with, which is important. Being at a place where you can really pick who you want to do a deal with. More recently, we absolutely have said no to groups or people on deals for the sake of just doing a maybe less plentiful financial deal, but with a better relationship. And so we're seeing that now in a lot of the build to rent business that we're doing, any of the work that we're doing through our builds or actually putting units on the ground that we own. Those are through relationships because it's such a long-term relationship that we know that we have the right partnerships, not necessarily the best return or the most money out of the deal. So, yeah, I think that's the greatest advice that I could give is just over time, do what you said you were going to do and enter into relationships, not just for the money or the returns, but it's someone that you can actually work with and have similar culture and strategies.
Yeah, I think that's great. And I think relationships, a lot of times when things are going great, it can be easy to see, oh, somebody else pops up, they've got a great deal, this economically is maybe better for me in the short term. But I think when you really invest in those relationships over time and you focus on everybody in the relationship doing well. In other words, as a lender, sometimes you get borrowers that come in and they will really hammer us on negotiations. The thing is, you can over negotiate. If you make the deal not a very good deal for your counterparty, if something happens in the world that changes the calculus of things, you may not be all that interesting as a customer. That may be the time you really need the partner. So I think really that's counterintuitive for a lot of people who are trying to build a business and trying to build their P&L and their balance sheet and all that. But you also really need to make sure that everybody is appropriately benefiting, because when it's lopsided like that, that can actually come back to bite you. It's when times get tough that the relationships really become, I think, ultra important. There's lots of other ways that they're important. But anyway, I think about that a lot as a lender. And I know in our business, and especially you've seen it too in 2008 and things like that, a lot of people didn't have choices. But if you didn't have really strong relationships, you had no shot. And I think those things happen in smaller ways, I think, all the time. And making sure that you're thinking about, hey, is my partner getting a good deal here too? Even if it's not ideal, or maybe I'm not making quite as much money, if they're eating, then we're all going to be able to keep doing this.
Yeah, it has to be a win-win.
That stickiness is important. So great. Listen, I think this has been a fantastic conversation. Yes. You've been very generous with your time with us the last few days. So thank you so much. Really appreciate you coming. Any final thoughts that you want to leave us with?
No, I think we touched on some really great points. And I want to reiterate, because I think a lot of real estate entrepreneurs listen to podcasts like this or how to get started. It is challenging at the beginning, but I think some takeaways were the one foot in front of another. Start with that first deal. Do what you said you were going to do. Find the balance. Make time for your wife, for your kids, but outwork, out hustle. Maybe 1 hour less sleep is what you need. Get in a little bit earlier and make it happen. But otherwise, it's fun when it starts to come together.
That's awesome. Well, that's why we call it the Hustle Harder Show.
That's right.
At the end of the day, man, it's just all about how hard you work, and you got to put all that other stuff together too, but you're not going to get too far if you don't put in the hustle. So yeah. I appreciate that. Yeah. Thank you again for joining us. I know you guys do a lot of building for other investors, things like that. For anybody who's listening who wants to get in touch with you, wants to explore opportunities in some of the markets you mentioned, what's the best way to do that?
Yeah, so our website is redcedarhomes.com. We love partnering on deals, land deals, or projects that people find if they need a little bit more help or just want to simply partner on a deal. But also on the build side, absolutely. Our team's always available to talk through an idea or a project. So we'd love to hear from everyone.
Awesome. We'll put that in the show notes too. Thanks again for all the time, and you were a great guest. We really appreciate it.
Thanks, buddy.